President Cyril Ramaphosa has thrown his full support behind Finance Minister Enoch Godongwana, following growing criticism over the controversial tax hikes included in the 2025 fiscal framework and revenue proposals. As opposition parties, civil society groups, and even some ANC backbenchers voice concern over the financial burden placed on South Africans, Ramaphosa has stepped in to defend what he called a necessary and responsible approach to securing our country's economic future. In a nationally televised address from the Union buildings, Ramaphosa acknowledged the widespread frustration but insisted that the measures outlined in the 2025 budget were not only essential, but unavoidable. No president enjoys standing before a nation and endorsing higher taxes, Ramaphosa said. But leadership is not about doing what is popular. It is about doing what is right. These tax measures are the result of deep consultation, careful planning, and a clear-eyed understanding of our economic realities. The proposed tax increases include a modest rise in personal income tax brackets for high earners, an increase in VAT by 1%, and elevated fuel levies, all aimed at narrowing the fiscal deficit, reducing debt dependency, and funding critical infrastructure and social welfare programs. The Finance Ministry insists the changes are temporary and designed to stabilize the economy over the next 24 months. However, the backlash has been swift. Julius Malima's EFF labeled the tax hikes as a declaration of war on the poor, while the DA condemned them as a desperate cash grab that punishes working South Africans for the government's decades of corruption and mismanagement. Protests have erupted in several provinces, with citizens demanding relief rather than more financial pressure. Yet Ramaphosa remains steadfast in his defense of Godongwana's leadership. Minister Godongwana has presented a budget that is balanced, measured, and mindful of the global economic environment. He has not shied away from difficult decisions. Instead of sugarcoating our problems, he has chosen to confront them head-on, the president remarked. Ramaphosa also hit back at opposition claims that the budget favors corporations while burdening the poor. He pointed to increased allocations for education, health, and social grants, noting that without additional revenue streams, the state cannot deliver on its commitments. It is easy to shout from the sidelines. But we must ask ourselves, how do we build schools, fix hospitals, and support the vulnerable without revenue? This is not a time for populism, it is a time for pragmatism, he stated. Despite the president's reassurance, tensions within the ANC are beginning to show. Some members have privately expressed concern about the political cost of the tax hikes, especially with national elections looming in 2026. There is fear that continued economic pressure could lead to voter apathy or a swing toward opposition parties that promise relief and populist alternatives. Still, Ramaphosa appears determined to stick with his finance team, signaling a deepening alignment between the presidency and national treasury. Analysts say this could be a defining moment in Ramaphosa's presidency, a test of whether he can hold the political center while pushing through difficult reforms. Political economist Thuli Masiko believes Ramaphosa is betting on long-term gains over short-term approval. He's clearly aware that South Africa cannot afford another credit downgrade or fiscal cliff. But it's a risky move. The question is whether voters will appreciate the strategy before it's too late. As protests continue and Parliament prepares for more heated debates over the budget, Ramaphosa's gamble is clear: stand firm now, endure the storm, and hope the economy turns around before South Africans return to the polls.